Oliver, Virgin Money has signaled its intention to float. Aldermore is further down the path towards the public markets. It set a price range for its IPO. Do I want to invest in a small challenger bank in the UK taking on the big incumbents?
Well, there's certainly a lot of opportunity if you do. There's the two you mentioned. There's also been TSB that floated earlier this year. One Savings has floated, and there's a few more waiting in the wings. So lots and lots of these challenger banks to challenge the big four incumbents in the UK: HSBC, Barclays, Lloyds, and Royal Bank of Scotland. Why would you want to invest in them? Well, they tell a nice, clean story. They'll also, they've got a nice niche customer base. They're new. There's certainly political support for more competition in UK banking. So
they've never been bailed out.
They've never been bailed out, and they don't have a lot of legacy issues hanging over them. They don't have a big mis-selling bills or LIBOR investigations going on. It's a clean investment story. So if you wanted a clean way into a newly competitive UK banking system, there's a lot of opportunity.
Great, then. I'm ready to slap down my money.
Well, hang on a minute. It's not all great news. The problem for these challenger banks is really one of scale. And that affects them in various ways. Firstly, in terms of regulatory costs. Since the crisis, there's been a lot more financial regulation, which is a good thing, but that does tend to favour the bigger banks who have the resources to be able to employ a lot of people to deal with this regulation.
Right. And they can spread the regulatory costs over a big base.
They can spread the cost over a big customer base, and that favours the bigger players. The challengers also have to face lethargy. In this country, people are very reluctant to change their banks, to change their current accounts. It's deemed to be a whole hassle to do so, although it's been made easier to do so. But nevertheless, people don't like to change, so they've really got to work hard, these challengers, to attract new people. And that leads on to the third problem, which is one of funding costs. If you're a challenger bank and you've got to attract deposits, maybe you're paying a higher deposit rate than the big incumbent banks do. And so your funding costs are higher, and that will affect either your margin or what you can charge for your products.
So when the prospectuses for these new ventures start hitting our desk, what are we looking for?
I think you're looking for really a very clear business model about how they're going to fund themselves, how much from deposits or other sources, how much capital they're going to need and how much they've got, but also a really clear business model, a really clear niche saying these are the customers we're going for, be they business customers or a certain sort of type of retail customer, and this is how we're going to get to them. I think it's going to be very, very difficult for a challenger who just looks a bit like a smaller version of what's out there to make much headway. So really, I think you'd be looking for something to have a real niche and a real idea of what the funding costs are and how that contributes to the business model.
Thanks, Oliver.